Hello, everyone, and welcome back to the G22 report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't. Just a little disclaimer, nothing should be construed as financial investment advice. Just my opinions, thoughts on the markets. And let's get into today's stuff. There's some pretty interesting stuff I decided to do today. And let's get into today's data, which was actually very good. And I consider this sort of a dead cat bounce. But if you look at it, we'll go. And I mean, I don't think it's real. Like, don't get me wrong. When I say data, I just mean the markets think it's good. It's not real. The retail sales up 6%. And even if you look at it, the trend is still down. But if you look at the previous, that was 9%. Let's just say it's 100, and then it loses 9%. That's 91. And then it went up 6% from 91. So you can tell the trend's still down. But markets, they're non-linear and fractal in nature. We are in a strong seasonal part. And initial jobless claims, which the market was about 221, which I think a lot of them are BS because a lot of these layoffs, they're they're disguised layoffs. Like, oh, they buy someone out. And so instead of, firing them, they count that, oh, they retired. Or they drag someone in for a month and then give them goals that are impossible to achieve, no matter how great of an employee you are. And then they know the person takes pride in the work, so they say, "All right, how about this? We either fire you or you resign." And so, yeah, they resign because they don't want it on their record that they got fired. And so, yeah, a lot of things like that. So, and then you can't get unemployment because, you resigned or whatnot. So, what they do, so a lot of these things, like the way they do it, the buyouts and everything, you can see with Doge, a lot of them are disguised firings, and so then it doesn't make its way into the data like this. But look at this Philly, like if I've been following this. It's been hammered, but I say, there's always a bounce. Philly Fed manufacturing. It's been down, down, down. Nothing goes straight down. Nothing goes straight down. You look at my hand, it'll go down, up, down. So that's the thing. The real thing about the U.S. economy, I think, like business inventories month over month, those haven't changed. They're not building up inventory because they know there's no sales. Housing market index, that's 33. It edged up from 32. But look at this, lowest reading since December 2022. So as you can tell, the housing market's not healthy. It's still bad, and it's going to continue to be bad. As I say, look at the retail sales this. But right now, the market's so hyper focused on tariffs. That's what's really driving. It's taco. Trump's chickening out. Uh, so, but if you look at it too, I think what else is also driving up the market is like you look at PPI, that's zero. So they're like, the tariffs aren't inflationary. Well, of course they're not. I always said they weren't. If you listen to this channel, there's a nothing burger. The real problem is the economy. That's the real problem. If you look at it, look at this. Mortgage rates 30-year percent, 6.82%. More than, I don't even need to, that's more than the previous. So remember and mortgage applications, that's down 10%. So demand's going to be really bad for the mortgage, and prices are going to fall through the roof. Core inflation rate 2%, less than 3%. And I think the real reason the inflation rate's going down is because these businesses don't have any pricing power now. They're forced to eat the cost. They can't raise prices because they do, they're going to lose customers. And they can't make it up on volume, or they can't make it up on increasing margins. They can't increase their margins. They don't have any way to increase margins. And not only that, there's not many consumers to go around. So they're like, you know what? We're going to increase our margins. We're going to get less customers. No, they're just going to lose all their customers. So a lot of these businesses are eating these costs now instead of, and that's why PPI, that was zero. A lot of these businesses are eating these costs because they can't afford to pass any of these costs on to the customers. So they're effectively essentially lowering their profit margins. So if we had an actual like press that would analyze, they'd see this PPI and say, "Whoa, this is scary," because now they're reducing their margins. They're not actually reducing cost, and so the prices are the same. No, they're eating into their margins. So anyway, a couple of things I thought was interesting. The dollar. This is why I don't like hearing about the dollar crash or anything. I do think it will eventually hyperinflate, but I might be old or dead by that happens. And I don't mean that in a facetious way where people are like, well, in the long run, we're all dead, and they think you're crazy for even thinking about it. I actually think it's going to happen. I just don't think it's immediate or imminent. So, and if you look at it, dollar accounts for 48% of global payments, highest share in 13 years. I don't think anything's going to replace it. I just think everything's going to become more localized. 2 times more euro and Chinese yuan. 88% of all foreign exchange trades worldwide. 58% of global foreign exchange reserves. Uh, I think if there is a replacement, it will be gold. And if you look at it, central banks from around the world are all buying gold. So far ahead of the euro is 30%. So dollars, the world reserve. I mean, it's not being lost anytime soon. Now it can, at least the way the Austrians think about it. Now it can lose by war. The U.S. got their world reserve currency by war. They can lose it by war. They lose a big war, they can easily get it. So don't act like there's no way they can't do it soon. The U.S. military is not strong. It's weak. Russia and China could easily beat the U.S. in a war. So not even like it wouldn't even be close. So yeah, that's how they can lose it. So look at this: three sudden, and even though the recent numbers, if you look at the trend, it's still down. Look at this: three sudden Georgia factory closures signal incoming trouble for the U.S. economy. This is story, and this obviously was recently, 12 hours ago. Right here, 717. So that didn't make its way into the data. So here it is, Flour Foods. You can see classic Wonder White. Another, of course, another factory. Oh, look at that. That wasn't a tiny little plant. And they showed how big the factory is. Pepsi Bottling, College Park, Georgia. So corporate cost cutting. So these are just recent. And then local impact. Yeah. And the last one, Georgia Pacific, Cedar Springs. So you can see, in the South, factories are closing. Heart goes out for those workers who lost their job. And this is the other thing, I just thought this was interesting. Exclusive Amazon cloud computing units cut at least hundreds of jobs, sources say. So Amazon, they're cutting jobs again. Look at AI tools triggering workforce reduction. Go figure. The thing is, AI, we don't have the energy, energy to do it. They have to build all these data centers. That's going to drive up utility costs. It's not the cost-saving mechanism that everyone thinks it is. Yes, we made difficult decision to eliminate some roles across particular teams. The decisions were necessary as we continue to invest, hire, and optimize resources. How are they hiring? They just fire people. So, yeah. And look at this. AW sales rose 17%. Operating income rose. So they just like firing people, I guess. Uh, Specialists were affected. So you want to know why we have a skill shortage? If you want to buy it, suppose businesses fire all their skilled workers. So, and look at this, eliminating managers. This is going to show up in the data. So massive layoffs are happening, and here's why we're having some. Look at this. The housing crisis update. Home builders are slashing prices at the highest rate in 3 years. So, and the whole thing is everyone talks about low mortgage rate narrative. Each passing day, more and more people, even though there's less volume, more and more people have 6 to 7%. So that whole notion that these people with 0% and low mortgages controlling, it's just not happening. So look at builder confidence. It's been in negative territory now for 15 straight months. Confidence rose slightly in July. Yeah, they're nonlinear fractal in nature. It doesn't go straight down. Buyer traffic saw 1 point drop, lowest reading since 2022. Look at this. Nation's home builders continue to see weakening demand. Of course, all these people were in the housing market. I saw it everywhere. Laughing at the bears. Well, who's laughing now? And I remember this one, Amy, she's prominent on Twitter. If you ask me, she just has a cute face. I don't really think she's insightful. She's definitely not like Melody Wright. Melody Wright's actually like smart. But anyway, long story short, uh, yeah, it's like Texas Runners was her Twitter name. I'm not on Twitter, but I forget what it was. But even she turned bullish, and I was like, that's the end. She was afraid of losing her audience. Lack courage. See, the good thing is I don't have an audience, so I'm not saying stuff just to placate to them, and I have audience that gets mad at me. So monthly builder conference. So you can see this. Look at this disappointing spring. Housing sector is weakened, poor profitability conditions, particularly from elevated interest rates. It's not from elevated interest rates, it's elevated prices. That's what it is. CNBC, if you're listening, it's elevated prices. Start saying it right. Look at 38% of builders cut prices in July, highest since they've been tracking that metric in 2022. Only 29% were cutting back in April. Pretty soon it's going to be all of them. So the ceiling is 100%. So you're going to see more. As builders are buying down mortgage rates to help get buyers in the door. This actually scares me because I was seeing people. Now, this is TikTok or YouTube videos showing TikTok reactions, but I saw all these people would buy new homes and these horror stories about how 8 months later they're falling apart. Like public builders supplement mortgage buydowns with more outright price reductions. Larger negative gross margin, EPS drags, they're unlikely to offset margin drag. So you can tell the housing market, single family housing starts post a decline. Look at this. Builder sentiment strongest in the Northeast rose 2 points, but flat in the Midwest now and dropped further in the South and the West. So as you can tell, pretty soon the Florida, Texas, that's coming around in the South, Tennessee. The Midwest is next. You're going to start to see homes go there. And not only that, I mean, I feel bad anytime I see this in Michigan because Michigan, if we were a serious country, like Michigan would really be at the forefront of getting great. They've had a history of great manufacturing and industry, but look at this. Michigan abruptly loses six factories as manufacturing collapse spreads. 2 days ago, it doesn't make into the strong manufacturing data. So here it is. LaPera shuts down mozzarella production. Pactiv Evergreen closes packing plant in Kalamazoo. Sorry, laying off 150 workers. Carry ingredients exit memo. Gosh, I can't pronounce, but cutting 100 jobs. You can just see death by Conagra Foods. Conagra, they're shutting down in Fenville. Graphic Package International. They're closing a plant in Wyoming, Michigan. Clemens cuts Coldwater pork plant. They're really so yeah. If you look at it, it's pretty sad. I would say what's happening right now. Uh, oh wow, I got something. But yeah, right now the market is still doing very well. And I think they're so hyper focused on tariffs, it's going to still continue doing well. In the beginning of the year, I was like talking, and then I was like, wait, Buffett's not resigned till the end of the year. So I didn't think anything big would happen. I think the markets are sort of safe. The way they're doing layoffs, a lot of them are spread out through the year so they don't fully make its way into the econ data. But you can see it's getting worse over time. Today was really good. And I think gold, that's really going to go up. But the thing is, it's in correction mode. And maybe when the new person gets fired, they drastically cut rates. Uh, the funny thing is, I, if Trump is this mad at Powell, imagine if we get into a recession. And I think that could cause Powell resignation. I don't think we're there yet. I thought we were closer, but earnings today on other things were reported good. You don't really know when you dig in. Uh, but anyway, I still think gold's in correction mode. I think there's one more upswing, and silver, it's on its way to 50. Uh, I think it's just correcting in terms of time. They always say that you're correct in price or time. It's not all that down that much. Like gold right now, let's just look at the price. For all the hoopla, went down 90 cents in the after hours. Let's see where so gold, yeah, it's at 3,339 bucks. That's not that much from the all-time high. Silver's at 38. Yeah, I think it's still up there. Platinum, 1481. Way up on all my platinum. I bought all this platinum jewelry when it was around 700 to 1,000. Happy to see that platinum price. Anyway, that's all. Just remember, nothing should be construed as financial investment advice. Just my opinions on what's going on. Consult a professional advisor if you are to invest, and and check other opinions. So anyway, hit that like button, subscribe. Thank you for watching. I'll see you next video.